In simple terms, we break it down. Complex stuff, we make it sound clear and easy for you and me. BillyGoatTales and Dave Digital bring knowledge we share. Terms, we're everywhere. We love you, fam. Hashtag givers gain.
Good morning, goats, and welcome to the Simple Terms Podcast, right here live on the BillyGoatTales Network. Today, we will be discussing DAOs. In simple terms, the decentralized autonomous organizations that we are hopefully in the crypto world, in the real world, are going to use one day, and they're going to make it through one day so that we can, where they belong, we can use these decentralized autonomous organizations. But first, we need to figure out what they are. Jesse says, I hear the song double. Awesome. Must be because of that. Do you have an echo too? Was that an echo? Maybe it was because of that right there. I see Jesse in the chat. Good morning, Jesse. Good morning. I see Magnus in the chat. That must mean that Joe is in there. Good morning, Joe from Trade Intuition. Good morning, Curtis Hill. Let me see J to the R. Let's freaking go. Got to share. Be right back. Thanks. J to the R. I appreciate that share. Let me see. Saw Crypto Billy in here. Good morning, Crypto Billy. Good morning to everybody. While we're saying good morning and everybody is coming in, I see Crypto Billy also says Tex-Mex, Biomex, boom, 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 boom was here also. Good to see you, Tex-Mex, or good to see you whenever I do see you. Let's take a look at the Bitcoin real quick here. Let's scoop that down. We'll look at it like that. Bam. Okay. So as you guys have been seeing, let me take that off at the 6 minute because many of you guys are not interested in a 6 minute time frame. But you can see if we move here onto the 4 hour. So what we have is we have been accepted back into this range, coming back down. This part is not any 618 or anything like that. That is simply a resistance and support that we have been messing with a lot. So you can see we bounced here again off of that. So we'll just have to see if Bitcoin wants to come down to there and bounce, maybe the golden pocket, maybe just the same support again, or if we're going to refill that whole range and then maybe even go lower. So with a 4 hour green dot, we also want to check the 15 minute and check the money flow. So normally what you want to see is a 4 hour green dot with the money flow coming up, not coming out. So I don't know that that's a good sign for a pump, but it is the weekend. So maybe we're just going to go sideways. This 4 hour is going to reset, another 13 times ish, 6, 12, yeah, something like that. 12, 13 times before everything gets going. So we still have this whole weekend, lots of sideways. Let me see, there we go. And so we'll just have to see how it goes. We'll look at the 8 hour. Do we have a green dot on the 8 hour yet? No, we do have a past red dot. And I mean, it just doesn't look good. Money flow is coming out in the 8 hour also. 16 hour money flow is coming out, about to cross into the red, got a red dot. So we'll just have to see. The high time frames don't look good, but again, it's the weekend. So we'll just have to play it by ear. Let's take a look at Zcash down at $385. Wow, we got some alpha from Red's research in our private chat right before all of this broke. And so Red was letting us know up here in this area. He says, hey, look, something's going on with Zcash. And he sent us some articles. And then, bam, that's what we got. So I'm not sure if I'm convinced that that is going to be horrible for Zcash. I think the other guys simply just wanted to go on to something where they could be for profit. So we'll have to just see what happens and play it by ear. We'll look at the charts. I think probably if you did look at the charts here, I mean, I'm expecting if you look there, let's see. We'll just have to see. That's not really that bad yet, because that's a higher low, right? We didn't get a higher high, but we still haven't gotten a lower low either. So we'll just have to see what happens on Zcash. We'll keep our eye on it as it goes through. Oh, I see my camera has disappeared. Let's turn that back on, see if that works. There I am. Good morning, everybody. Uh-oh. Jesse says Zcash is going to meet Muhammad. Everything going to zero. And then good morning to Steve Hickey. Good to see you over there. Good morning, good morning, good morning. All right, let's come over to here, guys. Let's see if we got volume on the Dow, because I definitely want to get into this, see what's going on, get to learn it a little bit. Uh-oh. And they've named it why Dow reality, why code is not law. So we're just going to have to dig in and see what we've got. Let me see. Ice bag. I'm not sure what ice bag means, but Crypto Billy says ice bag. So let me get my little piece of paper out so that I can tell the AI who's here and I can write down all my questions. Let's go ahead and see if you guys can hear it first. Put a one in the chat if you can hear the AI. You'll see this little squiggly line start to bounce whenever they are talking. I want to know that you guys can hear it. And then at the same time, if you have questions, you know how this works. Put your questions into the chat. This is how the show works. It makes it so much fun when you guys have questions, whether they're fun questions or serious questions, educational questions, or just questions that you have. We'll ask the AI those questions. So put your questions in the chat. I will star them, and then I will come back to them whenever I think there's a time where I can slip in on the AI without resetting them. Sometimes they reset, and if they do, then we'll just reset with them and we will go from there. So we're going to go ahead and check the audio and see what we have. You guys are ready? I'm ready. Let's see. One in the chats if you can hear the AI. Zero in the chat, two in the chat. All right. So here's what we're going to do. I'm going to refresh it. Oh, I know what the problem was. I had it on mute, but that's okay. Let's go back to the interactive version. Let's scoot all these notes out of the way. And let's push unmute on that window. There we go. Unmute on that window. And now we'll push play.
This is the Simple Terms podcast where we break down complex crypto,
Let me know one
financial,
in the
and
chat.
technical systems in plain English for the everyday person. We're live on the BillyGoatTales Network.
Let's
Today's
go,
topic
Joe.
is decentralized autonomous organizations, or DAOs, and as always, the goal here is understanding, not persuasion. We have a massive stack of sources today, diving into everything from historical governance failures to some really cutting-edge voting theory.
If you're here live, you're in the primary experience. Everything else you may see later is built to support this conversation. We are going to treat you like the third person in this deep dive, pulling back the curtain on why these organizations are, well, both revolutionary and deeply flawed. And as we always must, a quick disclosure, this discussion is educational only. This is not financial advice. Crypto and blockchain systems involve risk, including total loss. Before we start, a quick framing note. We are not here to sell DAOs. We are not here to rank them. We are not here to tell you what to do. We're here to understand why DAOs exist, what problems they try to solve, and where they struggle together. Ask questions as we go. There are no bad questions here.
Yeah, our mission today is really to give you a shortcut to understanding the biggest tensions that define these decentralized organizations. So let's start warming up the chat right now. You at home, we want to know. Before today, what did you think a DAO was? And when you hear the word decentralized, what comes to mind? Or here's a good
They're
one.
asking you
Have you
questions,
ever
chat. So
participated in
I
a
want to
group
see some
decision
answers.
that just felt messy or slow? We are looking for those real world experiences to ground this discussion.
I'm already seeing some fantastic and frankly hilarious answers coming in. Okay, we have
Whoa, did someone just break the fourth wall? Let's hear it.
Yeah, breaking the fourth wall. This is Dave Digital. I am the host right here on the Simple Terms podcast on the Billy Goat Tells Network. And you guys are live. This is our live stream on Saturday morning. And we have the live chat with us. I just want to introduce you guys to the live chat. before you dive right into our topic today of DAOs, we have Steve Hickey in the chat. We have Jessica Luck in the chat. We have Joe from Trade Intuition, where you learn to trade without the tuition. We have Billy, the founder of the BillyGoatTales Network and the spreader of the Givers Gain Ecos. We have Curtis Hill in the chat. And I believe that we probably have a couple more in the chat that I just want them to say hi so that I will recognize them. And then I want you guys to say hi to those folks. And then I want you to jump right on in.
That's right. Hello, Dave Digital. Welcome, everyone.
And thank you for mentioning Joe from Trading Tuition.
It's fantastic to have them joining the live chat with us today.
We always appreciate our network partners being here.
And we are definitely live on this Saturday morning deep dive.
You bet. We're getting right into DAOs.
That's right.
We're watching the live chat and we're seeing some great answers.
Let's jump into those community thoughts now.
Okay, we have Decentralized Dan, who says, I thought a DAO was a digital cooperative run by software, but maybe kind of utopian. That's a great starting point, Dan.
That's a really good way to put it. Utopian's a key word there.
And Aura22 says, messy and slow. Yes, every time my family tries to choose a vacation spot.
That's perfect. That feeling of coordination breakdown is exactly what DAOs are, in theory, designed to solve. And I see one user, Protocol Pack, saying, decentralized to me means that the rules are fair because a computer, not a person, is enforcing them.
Ooh, that's a good one.
Yeah, that taps right into the foundational code as law ideal that we are absolutely going to unpack and maybe challenge a bit later on.
Those intuitions are spot on. We're going to take that conflict of a digital cooperative governed by automated rules and figure out when that automation is brilliant and, when it's a total disaster.
All right, let's do it.
Okay, let's unpack this immediately and anchor everyone with the basic definition. This is the definition that cuts through all the noise and jargon, the one we want you to internalize today.
So a DAO is a group of people trying to make decisions together.
Okay, simple start.
Using shared rules written into software instead of relying.
Oh, go for it.
Wow. Before you jump into the definitions, I want to say thank you to Andrea in the chat, who was one of our first mods ever on the BillyGoatTales Network. She just dropped $49.99 and she said, great job, Dee Dee. She did that in a super chat and we're really appreciative of that. And then I want you guys just to keep on right where you left off. Tell us the definition and go from there.
Thank you so much for pointing that out.
That is fantastic support.
And a huge shout out to our former mod.
That really means a lot to us.
We truly appreciate that generosity.
We love having the entire BillyGoatTales community here.
It's all about sharing the knowledge together.
Absolutely. Okay, moving back to our definition.
We were just about to finish angering everyone with that simple definition of a DAO.
Right. A DAO is a group of people trying to make decisions together.
Using shared rules written into software instead of relying on a traditional boss or company hierarchy.
I like that definition because it really emphasizes the two core parts.
You have people trying to coordinate.
And then you have code that's helping them do it.
Let's break down that acronym because each letter signals a massive departure from traditional organizations.
Yeah, let's start with the O organization.
When we talk about DAOs, we aren't talking about like a casual online community or a forum.
Right. They are designed to be structures much more like corporations or limited liability partnerships, LLPs.
They are member owned.
And what does member owned actually mean in practice here?
Well, it means that the power structure is flipped on its head.
So instead of a board of directors or a CEO at the top, a hierarchy.
Governance is controlled collaboratively by the members themselves.
And this is typically done through voting rights that are tied to digital tokens held on a blockchain.
So you can think of the tokens as like digital shares in the organization.
They define both your ownership and your voting power.
Exactly. And this is where the DAO starts to feel a little bit familiar.
Like a cooperative or a credit union, as one of our listeners mentioned, but it's built on a global digital scale.
Okay, let's jump to the A, autonomous.
This is where the tech enters the picture, and I think it's where the term often causes a lot of confusion.
It doesn't mean the DAO just runs itself with no humans at all.
Precisely. Autonomy here is very specific.
It relates to execution.
The organization functions through these predefined self-executing rules that are enabled by open source software.
And, most crucially, by smart contracts.
The smart contract is the key innovation.
It really is. Once a decision is made by the human members, say, to fund a new project or change some rule, the system manages the execution of that activity automatically.
So if the group votes to send $1 million to a software team, that money just moves.
Instantly.
Automatically.
The second the vote passes.
Yep. There's no legal team approving it, no accounting department signing off on a wire transfer.
The code just runs, and it runs irrevocably. That's the vision. The system manages payments, fund dispersal, even updates to the rules of the organization itself.
All without requiring a human in the middle for every single action.
If the conditions are met, the code executes. Period.
And that efficiency is a huge driver behind this whole idea.
And finally, the D for decentralized. That's the big philosophical pillar.
Decentralized just means distributing the decision-making power.
Instead of a top-down hierarchical structure, that authority is spread among all the token-holding members.
So the goal is to eliminate that single point of failure.
Yes, exactly. The CEO who might make a terrible decision, or the central bank that might act against the community's interest.
You get rid of that central point of control.
Okay, I'm pausing now, just as promised, for you out there in the chat.
Does that definition surprise you at all? What feels familiar about it?
I think the surprise for a lot. Yep, go on.
Yeah, thanks for pausing right there for the chat. There are a few things that I want to update you guys on. I really appreciate what you guys have explained to us so far, and I want you not to lose your place and continue right where you left off whenever I stop with my comment. But I wanted to point something out. So Andrea is one of our first mods, and she is still one of our best mods. She's not a former mod. And then I wanted to say hi to JR that's in the chat and Loco for Crypto that just came into the chat, and also Donato Cabrera. So if you'll say hi to those folks, make that correction with Andrea, and then go ahead and continue right where you left off.
Thanks for pausing us, Dave Digital.
We really appreciate you managing the stream.
And a huge shout out again to that incredible support from our mod.
And we are always happy to see JJR local privilege in the chat too.
We love having all the community members joining the deep dive.
We'll get right back to the conversation now.
We were just asking the audience what part of the DAO definition surprised them.
And we've seen a lot of great feedback in the chat.
I think the surprise for a lot of people is that blend of automation and human governance.
We're used to things being either entirely human run or entirely machine run.
A DAO is trying to fuse them together.
And the familiar part, I agree, is the idea of collaborative member-owned governance.
We see it in co-ops and mutual funds, even in some nonprofits.
Totally. A recurring thought I'm seeing is that the level of automation feels risky.
If the code runs irrevocably, what happens if the code is wrong?
That's a brilliant question, and it takes us directly into the biggest historical crisis in DAO history.
We'll cover the DAO exploit in detail a bit later because that crisis directly challenged the code is law principle.
But first, let's step back. Why were these things even invented?
Yeah, what was the problem that you're trying to solve?
It's easy to focus on the flashy technology, but DAOs really emerged as a necessity, not just a novelty.
They are a direct and often radical response to centuries of experience with centralized systems.
Well, failing the people they're supposed to serve.
Exactly. We have to look at the foundational critique of centralized governance.
Traditional corporate structures, for all their utilities, suffer from these intrinsic systemic flaws.
And the biggest flaw is just the concentration of power, right?
Absolutely. The hierarchical concentration of power is the starting point.
In a traditional company, a select group, the directors, the C-suite execs, they wield this disproportionate influence.
And even the best regulations haven't entirely fixed this.
This centralization creates a vacuum where accountability can just disappear when things go wrong.
And we have these grim historical markers that prove this point.
We don't just talk about Enron and WorldCom as like historical trivia.
We talk about them because they represent catastrophic failures that result from unchecked power.
Yeah. Enron and WorldCom showed that despite all the legal obligations, managers could prioritize their own self-enrichment
over the interest of shareholders and their own employees.
It's the classic agency problem, that conflict of interest that arises from separating ownership from control.
Management's actions, driven by bonuses or personal ambition, often just don't align with the collective goals of all the stakeholders.
And the Sarbanes-Oxley Act was passed after Enron precisely to try and fix this by creating more stringent financial controls.
Right. But despite those efforts, we still saw the 2008 crisis.
Institutions like Lehman Brothers collapsed under opaque internal risk management, again highlighting these deep weaknesses in managerial accountability.
Which brings us to the third critical issue.
Opacity and a lack of trust. Yeah, traditional organizations operate largely behind closed doors.
Financial and operational information is often carefully curated or just withheld.
And if stakeholders can't see what's truly happening, they can't hold the organization accountable.
It becomes a matter of trusting the CEO's press release, rather than verifying the actual activities.
So the DAO is born out of this historical dissatisfaction.
It promises to solve all three of those things:
centralization, agency problems, and opacity.
So how does the technology deliver on that promise?
The DAO promise is built on technology for solving coordination and trust.
First, accountability and transparency.
By leveraging the blockchain, everything is recorded immutably on a public ledger.
All organizational activities, transactions, decisions, they're all visible and auditable in real time.
So it's trust through verification, essentially. You don't have to trust me, you can just check the ledger.
Exactly. Second, coordination at scale.
The internet has created these global communities, people who share interests or goals across borders.
DAOs distribute decision-making power to all token-holding members, enabling this kind of participatory governance.
For vast, dispersed communities, in a way a traditional corporate board just can't manage effectively,
It's an attempt to build a global organization with democratic roots.
which leads to the trustless idea.
The idea that we don't need to rely on human good faith anymore.
In theory, yes, DAOs are trustless because participants only need to trust two things.
The mathematical security of the blockchain and the smart contract code.
You remove the need to rely on human intermediaries, a bank manager, a CEO, a compliance officer.
The code is the intermediary, executing its function neutrally and reliably, removing the weakest link.
Human fallibility or self-interest. This concept of solving coordination is crucial.
Let's bring the audience back in here. Where have you seen coordination break down in real life?
And what happens when no one feels responsible or when too few people are?
I mean, think about open source software projects.
They're inherently decentralized.
answer
but
that
they
in the
often
chat.
suffer
Where
because
have you
there's
seen
no clear
coordination fail in
mechanism
real
to
life?
incentivize maintenance or, fund necessary
A
upgrades.
few dedicated people just burn out.
Or the community just fragments because they can't agree on the next direction.
Yeah, totally. That's a perfect example.
A friend of mine runs a massive digital community, and he said the hardest part is just getting people to contribute financially.
Even if they benefit from all the resources.
He feels entirely responsible, and most people feel not responsible at all.
DAOs try to turn that passive user base into active owners through the token system.
By giving them ownership skin in the game, they're incentivized to participate and ensure the DAO thrives.
It's an attempt to align incentives. If the organization succeeds, your token, your share of the organization succeeds.
Right. The foundation is, hey, yeah, what's up?
Awesome. I want you guys to keep right where you're at talking about the incentives for the people that are in the DAO. But it is very important to me that you guys say hi to the people that are in chat. And we had Poman13 came into the chat. We had All Set Analyst. I'm not sure if you said good morning to Donato Cabrera. And I also want to point out that Jesse has been very generous and he just gave us a $5.99 super chat. And Crypto Billy also put in his membership milestone for 5 months as a member. And then he also dropped a $9.99 super chat. So I want you to tell them thank you. And then I want you to continue right where you left off as you say hi to everybody that's in the chat.
Thanks for pausing us again. We love it.
And thank you for keeping us connected to the chat.
A huge good morning and thank you to Pose and Lansing.
We really appreciate you joining us live for the deep dive.
And a massive thank you to Crypto Billy,
Wow. We appreciate that incredible support.
both the 5 months membership and the super chat.
That generosity really helps us keep this stream going.
It's all about sharing with knowledge together.
We are so grateful for our entire community.
And you raised a critical question for us to address right now.
You want us to talk about how these historical incidents feel for the people inside the DAO.
That's a great human angle to take on this.
We talked about the DAO exploit as a technical failure.
But for the 11,000 investors, it was a massive shock.
Imagine trusting a system completely, seeing a huge investment.
Up to $250 million, right?
Exactly. And then watching $60 million drain away publicly.
The atmosphere was a mix of panic, blame, and ideological warfare.
The founders, like Slock.its Jench and Tool, were excoriated by the community.
They expressed concern that the DAO was becoming a fearsome worry.
The human element of that crisis was existential.
The value of their currency, ETH, plummeted.
They felt betrayed, not just by the attacker, but by the law they had trusted.
It forced a public, agonizing debate about what was morally right.
The hard fork was chosen to restore fairness and prevent disaster.
But the people who believed code is law felt this was a core deception.
It was a very painful public moment of realization,
That the human element can never be completely removed.
especially when massive amounts of money are involved.
That brings us right back to our original conversations.
The foundation is the why. Now let's get into the operational how.
Since the entire system rests on software, we have to start with the engine. Oh, yeah,
Yeah, before we get into the operational how, this is Dave Digital again, and we had a couple more people jump into the chat. We had Melissa, One Love, I call her Missy. Good morning to Missy. We had Harp jump into the chat, and we had Army Piper that came into the chat and said he just came. I think he said something like, I came to cause trouble and talk trash to DD, except his word for trash was a little bit more colorful. But don't lose your place, say hi to those folks, and let's keep going.
Thanks for pausing us once more, Dave Digital.
We really appreciate you keeping us updated on the chat.
And we are happy to say good morning to Miss 60.
And a big welcome to Mr. Parker joining the conversation.
We love the community engagement.
It's why we do this deep dive live.
We always encourage passionate conversation.
But we have to make sure we keep the discussion grounded.
We stick strictly to the educational topic at hand.
So we'll keep any off-topic comments aside for now.
We appreciate all viewpoints, but let's maintain the focus on DAOs.
We were just about to dive into the operational how.
Since the entire system rests on software,
We have to start with the engine room.
smart contracts, and the blockchain,
The foundation is the Decentralized Ledger Technology, or DLT.
the blockchain itself.
So whether we're talking about Ethereum, Solana, or another network,
This DLT acts as the secure, immutable public record book.
it's the ultimate corporate ledger.
And it's decentralized because thousands of computers around the world are verifying every change the DAO makes.
Guaranteeing transparency and preventing unauthorized tampering.
Okay, so on top of that, you have the smart contracts.
Right, these are the software scripts that live on the blockchain.
They are just written terms.
They are functional, self-executing programs.
They define the DAO's operational rules, who can propose, who can vote.
How much funding is available and what conditions trigger an action.
So the contract doesn't just say you get paid if you hit a target.
The contract automatically pays you when that target is verified on-chain.
Exactly. They monitor, execute, and enforce terms without human intervention,
And once deployed, they are irrevocable.
which is both their great strength and, as we talked about with the DAO, their huge liability.
All right, so now let's trace the decision-making flow.
It's still human-driven at the beginning at the input stage.
The process always starts with humans, with proposal and discussion.
A member, usually a token holder, identifies a need.
Say a protocol upgrade or a new investment.
They write a detailed proposal, which is then discussed in community forums.
This is where human social interaction, debate, and consensus building still happen.
And this discussion stage is vital.
It requires the community to analyze technical feasibility and legal risks.
Yeah, and only after that discussion does it proceed to voting or signaling.
This is the formal governance step,
While voting mechanisms can vary wildly, the most common default is token-based voting.
where your stake in the DAO determines your voting power.
So the number of tokens you hold,
Right, and if the proposal reaches the predefined quorum
that's a minimum number of votes.
and the required approval threshold, say 66%, then the code takes over.
That's the automatic execution.
The approved proposal triggers the smart contract.
The code ensures strict compliance with the preset rule,
It executes the payments, changes the protocol, or allocates the funds.
all without requiring any further human managerial approval.
And this is our crucial reminder, which we need to make crystal clear.
This doesn't remove humans, it rearranges responsibility
It shifts human responsibility from execution and enforcement.
to design, proposal, and monitoring.
Humans write the code and set the initial parameters.
If those parameters are flawed, the automated execution will simply follow the flawed rules perfectly.
Let's dive into the fascinating world of alternative voting systems.
The default one token, one vote system is easy to understand,
But it's essentially a plutocracy, right?
where the biggest capital holders dictate the direction.
Yeah, and that prompted this intense innovation to try and democratize the system.
A prime example is vote delegation, which you see frequently in large systems like MakerDAO.
So how does that make it easier for the average token holder?
Well, delegation exists to solve the high cognitive cost of participation.
If you hold tokens, but you don't have the time or the expertise to read every lengthy technical proposal,
Which, as our research shows, is the case for over 90% of members.
93.7%, yeah.
You can temporarily transfer your voting rights to a specialized delegate.
These delegates are often informed community members or technical experts.
They publicly commit to voting.
Oh, yeah, uh-huh.
Definitely don't want you guys to lose your place. I appreciate what you're telling us, but this seems inherently flawed. So you have this vote, right? You don't want to vote, or at least 93% of the people don't want to vote. So they give this vote to a delegate, and then the delegate cast votes for them in their with the delegate's own opinion. That seems super flawed. Can you talk about those flaws and how that seems more centralized now?
You are absolutely right to point out that core tension.
That is a phenomenal observation and a very accurate assessment of the system's flaw.
It's the central paradox of decentralized governance.
We want participation, but we get concentration.
We want to thank Dave Digital for managing the stream and allowing us to keep this conversation flowing.
We absolutely will not lose our place.
Your point about delegation, just reinforcing the centralization, is crucial.
You mentioned that the system doesn't seem super hot.
And the research backs you up, especially considering that 93.7% of members who don't vote
That low participation forces people to delegate their power.
And those delegates become a new, small, centralized group.
Our sources show that this delegated power is often concentrated among a few informed technical experts.
So you're trading one type of centralized authority for a more efficient but still concentrated one,
It creates a de facto central class of political figures.
even in a supposedly trustless system.
Your question about how this relates to the code as law principle is also essential.
If only a few experts understand the code, then the majority is just trusting those experts.
The trustless ideal is undercut by the cognitive barrier to entry.
We're going to dive right back into alternative voting systems now,
We want to show how different systems try to combat this centralization you just highlighted.
especially that tension between inclusivity and expertise.
These systems are trying to fix the issues you've just raised.
Okay, let's talk about how delegates are supposed to vote in your interest.
They publicly commit to voting in your interest.
It's like hiring a proxy or a technical advisor.
You keep your tokens, but you delegate the political decision making.
That makes the system more efficient because decisions are being made by people with the expertise.
But it's still democratic because you can withdraw your delegation anytime.
Exactly. Next, we have something called quadratic voting, or QV.
This is specifically designed to combat the tyranny of the majority by measuring intensity.
I still think the formula sounds intimidating to people.
Walk us through the conceptual payoff again.
Why is this important? The mechanism is simple.
The cost of votes goes up quadratical.
So if you want one vote, you spend one voice credit.
If you want 2 votes, it costs you 4 credits.
3 votes cost 9 credits.
So if a large stakeholder wants to cast 100 votes,
It costs them 10,000 credits.
and why go to all that trouble? The payoff is intensity.
A powerful stakeholder might have the capital to buy 51% of the tokens.
But they probably won't care intensely about every single vote.
A smaller stakeholder might only have enough credits for 2 votes,
But if they spend 4 credits on that one issue, their vote carries significant weight.
precisely because they were willing to pay that high cost.
So it changes the dynamic from who has the most money to who cares the most about this specific issue.
Exactly. It infers that passionate, highly valued preferences are not easily overwhelmed.
Not overwhelmed by the mild preferences of a wealthy majority.
That's a genuinely fascinating innovation.
Then there's the system designed purely for speed and scalability.
Holographic consensus used by systems like DAO stack.
Holographic consensus is complex, but the core idea is simple.
It uses prediction markets to filter proposals.
Members stake a small amount of tokens, a wager, essentially, to signal which proposals they believe will pass.
So it's like betting on an idea, basically.
And if a proposal gets significant stake support early on, it's boosted to a formal community-wide vote.
So instead of putting every single idea before 1,000 people,
You use financial signaling to identify the most promising ideas quickly.
avoiding that consensus fatigue.
And finally, let's touch on conviction voting, which rewards long-term commitment.
Yeah, conviction voting is designed to slow down rapid decision making.
That might be driven by, transient market sentiment.
Participants stake their tokens to support a proposal, but their voting power builds up over time.
So the longer you leave your tokens on a proposal,
The stronger your vote becomes.
this mechanism encourages sustained support and thoughtful commitment.
Discouraging rushed, impulsive votes that might destabilize the organization.
That is an incredible laboratory of democratic experiments happening right now.
Let's ask the audience, where do you think this helps?
And where do you think it creates friction?
Well, it clearly helps with transparency and providing tools to mitigate the raw power of capital, like with QV.
But the friction is obvious.
You have to be a pretty sophisticated voter to understand which system is being used.
How to delegate correctly and what the financial implications are.
Right, we're trading bureaucratic friction for cognitive friction.
If you have to read a white paper just to know how to vote, that high barrier to entry undermines the entire goal of inclusivity.
And that leads us perfectly into the core problems.
The tensions. We've established the ideal. Oh yeah, go on.
Sure. Right before we go into the core problems, since we have established the ideal, I do have a question. So you said that the delegates, they're supposed to vote, or the people that get the money delegated to them are supposed to vote in the interest of the people who delegated their votes. So the question is, that would be impossible, right? Since not all of the people who delegated their votes have the same request, it would be impossible for the person that's doing the voting to vote in the interest of all the people that delegated the votes, right?
That is a phenomenal question.
And it cuts straight to the massive conflict.
You're pointing out the fundamental agency problem.
If you delegate your vote, you assume the delegate knows your interest.
But if they have 10,000 milligators, how can they possibly know all 10,000 interests?
It's essentially impossible.
And that's exactly why this system is constantly under stress.
The expectation is that the delegate votes for what is best for the DAO.
Value enhancing proposals, essentially.
But our research on MakerDAO shows the flaws in that,
Delegates are often rewarded with more power if they cast correct votes.
where correct is defined by whether the vote increases the DAO's value.
But we also found that delegates with conflicted tokens,
Other crypto holdings that might compete with the DAO.
they are more likely to cast incorrect votes.
So if the delegate holds a token that benefits from a proposal failing,
They often vote against the proposal even if it benefits the DAO generally.
it's self-interest overriding the collective interest you mentioned.
The system tries to solve this by allowing you to withdraw your delegation.
You can punish a delegate by pulling your votes if you don't like their behavior.
But you're right, it's a continuous tension, not a solved problem.
That brings us perfectly back to the core tensions.
The ideal and now the reality.
Oh yeah, let's hear it.
That is a brilliant clarification of the quadratic voting concept.
You nailed the core problem it solves.
You're asking, why would the big capital holder use QB if they could just use their raw token power?
And the answer is they don't have to.
That's right.
They usually stick to the one token, one vote system.
But QV exists precisely to mitigate the power of that rich but indifferent voter.
So if the rich voter with the most tokens doesn't use QV,
And a smaller voter does use QV
the smaller, more passionate voter's influence is magnified.
because they paid that high cost for those extra votes.
So it's not that QV forces the wealthy to care.
It creates an alternate pathway for intense preferences to win.
Even against a wealthy majority that only cares a little bit,
That is the whole point of that quadratic pricing mechanism.
to help ensure that passionate minorities are not easily overwhelmed.
Now, let's connect that beautiful ideal to the hard reality.
You've highlighted the core struggle.
The ideal and now the reality.
Democracy enforced by code.
We step into the reality now
The ideal clashes with human nature.
and logistical complexity.
We have 4 core tensions that define the struggle of DAOs.
Tension number 1, participation versus efficiency.
The fundamental challenge of democracy.
Trying to decide where 1,000 people should order lunch from.
Using an email chain.
That's the conflict.
While DAOs aim for maximum participation, the reality is a significant governance burden.
Studies have observed shockingly low turnout.
The average participation rate is often around 6.3%.
6%. That means 94% of the members are essentially passive.
And we have to ask why. It's the cognitive cost.
To cast an informed vote on a complex proposal, you need to dedicate hours.
Most people just don't have that time or expertise.
And this low participation creates a centralization paradox.
If the vast majority of people don't vote, power concentrates.
Among the small, active subset of informed participants.
Or the large token holders.
And to maintain efficiency, DAOs are forced to adopt centralized structures.
Like the sub-DAOs you mentioned.
These are effectively mandated committees or working groups.
They get delegated authority by the main DAO.
This avoids putting every small decision to a slow, full membership vote.
They're necessary for speed, but they sacrifice the purity of decentralization. Yep.
Tension number 2, transparency versus security and trust.
Transparency is the DAO's superpower.
But it's also a huge vulnerability.
Imagine running a corporation where every financial allocation is broadcast.
That's what blockchain auditability provides.
But this perfect transparency allows for bad human behavior to persist.
It does.
Research has uncovered troubling evidence suggesting the replication of governance problems.
Specifically insider activity or insider trading.
Since all transactions and the proposal timeline are public on the chain.
Researchers were able to track active investors, proposal managers, top voters.
And found they engage in abnormal trading volume of the DAO's native tokens.
In the days before a proposal is created or announced.
Wait, so the people who know what proposal is about to drop are trading ahead.
Precisely. And this pre-proposal trading is profitable for the proposal managers.
This suggests information asymmetry is being exploited.
Replicating the dynamic of insider trading within a supposedly transparent system.
That is deeply unsettling.
It's the human element immediately finding the cracks.
And what about technical security flaws?
The immutability of the code is a double-edged sword,
Once a coding flaw is deployed, it is permanent and visible to the public.
including potential attackers,
When a cybersecurity breach happens, like with BadgerDAO,
which lost over $120 million.
the lack of a central authority to rapidly patch the system complicates the crisis response.
Tension number 3, automation versus human judgment.
This is the
Yeah.
Yeah, right before we get to tension number 3, I do want you to say hi to a couple more people that have joined us in chat. We had Paul join us in chat, and we had Crypto Princess also grace us with her presence in the chat. And then right before you get to that number 3, there was one more thing I wanted you to go back and touch on. You said that DAOs are getting their voting topics from prediction markets or using prediction markets to gather information that'll lead into their voting topics. Can you go back and touch on that real quick after you say hi to the new people in the chat?
If enough people are willing to put their money where their mouth is.
and stake tokens on that proposal.
The system sees it as a highly valued idea.
That strong early financial signal then boosts the proposal.
It skips the initial noise and goes straight to the formal vote.
The idea is that the market's collective wisdom predicts the outcome.
It acts as an efficient information filter for the community.
So instead of voting, you're signaling and predicting.
It's a mechanism trying to ensure that only the most popular, most likely to succeed proposals reach the entire community for a vote.
It's all about making the decision-making process efficient and scalable.
It's a way to combat the low participation issue we discussed earlier.
By using tokens to measure intensity, not just volume.
That's a great digression. Now let's get back to our core tensions.
Tension number 3, automation versus human judgment.
This is the philosophical core. Code is law.
The core promise of DAOs is that smart contracts are deterministic.
They lack the capacity for ambiguity, context, or moral judgment,
And this tension just exploded in 2016 with the DAO exploit.
which we spoke about earlier, and the panic it caused.
That story is essential for understanding the system's fragility.
It was huge. The DAO was designed as an investor-directed venture capital fund.
And it raised over $250 million worth of Ether.
That massive valuation shows how much faith was placed in this concept.
And then the attack came,
An attacker found a recursive calling bug in the code's wallet function,
which allowed them to repeatedly drain funds during the withdrawal process.
eventually accumulating around $60 million worth.
And the whole community was just watching this happen on the public ledger,
Yes. And then the attacker published an open letter.
arguing that they were simply utilizing a feature of the code.
Since the DAO's operating terms stated that the code superseded any descriptions,
The whole code is law ideal.
they argued they had a perfect right to the funds.
So under the terms of the DAO's own contract, the attacker was technically correct.
But morally, the community felt they had been robbed.
This became a philosophical crisis.
And the resolution was the most controversial moment in blockchain history.
The Ethereum
Oh, yeah. Uh-huh.
Yeah, right before you tell us about that controversial resolution, we have a question from the chat. Steve O, who just joined us, Crypto Steve O, says, please ask them how the Clarity Act, if passed as is, could negatively or positively affect DAOs.
That is a phenomenal question from the Chief Justice.
Thank you so much for bringing that up, Dave Digital.
And a great challenge.
You're asking us to bridge this concept to real-world legislation.
That's right. The Clarity Act, or similar proposed legislation, aims to define the legal status of crypto assets.
Remember, we spoke about the risk of DAOs defaulting to a general partnership.
Which means unlimited personal liability for every member.
If a Clarity Act were to pass, it could fundamentally change that,
A positive effect would be providing a clear legal definition.
potentially classifying DAO governance tokens as something other than securities.
Or, more importantly, offering a specific DAO LLC type legal safe harbor.
This would grant token holders the limited liability protection they desperately need,
So it moves DAOs out of the legal gray zone.
and reduces the terrifying risk of losing your house over a failed vote.
A negative effect, however, is regulatory overhead.
If the act imposes heavy compliance or disclosure requirements,
That could stifle the innovation and the core decentralized nature of DAOs.
it's the classic trade-off: security and clarity versus freedom and speed.
Right, and this ties directly back to our final tension.
Code is not law, and the legal system will intervene.
Now let's get back to that controversial resolution.
The Ethereum community faced an existential choice:
Honor the code and lose the $60 million.
or use human consensus to intervene.
and they chose to intervene. They executed a hard fork,
This was a coordinated rollback of the entire blockchain history.
allowing investors to withdraw their original funds safely.
They effectively broke the central rule of blockchain immutability in the name of human fairness.
And preventing financial disaster.
The fact that the chain split demonstrates the magnitude of the disagreement.
Some users broke off to form Ethereum Classic, the chain that honored the code.
Tension number 4, inclusivity versus expertise.
The power problem.
We want everyone to participate, but decisions require deep technical knowledge.
Should everyone vote on complex faculty appointments?
While DAOs distribute power, they often centralize in practice due to the cost structure.
Token-weighted voting ensures that those with the largest investment stakes have the largest vote share.
So we end up with the same power structure we were trying to escape, just digitized.
It risks reinforcing existing power asymmetries under a decentralized facade.
Furthermore, when participation rates are so low, a small group of highly active founders can effectively dominate.
Becoming a de facto centralized control group.
Okay, we've raised 4 core problems.
Low participation, insider trading, the failure of code as law, and the centralization of power.
They are all unresolved trade-offs.
So, audience, we want your immediate reaction.
Which side do you lean toward for each tension?
Do you prioritize efficiency over participation?
Do you prefer code determinism over human judgment?
We're going to read some of your responses now.
I see Determinist Dave arguing strongly that the hard fork destroyed the philosophical integrity.
And that the $60 million should have been lost as a painful lesson.
But look at Fairness Fan here, saying if the code creates an unfair outcome, the community must fix it.
Or the system is ethically bankrupt.
And that shows you the massive fault lines this technology opens up.
The utopian narrative around DAOs has led to widespread misunderstandings.
We need to do a course correction and ground these ideas in the real world.
Yeah, let's start with the largest conceptual hurdle.
Decentralized does not mean no power.
We've established the centralization paradox.
Low participation plus token-weighted voting means power gets concentrated.
Among a few insiders or large block voters.
And the system becomes fragile too.
We saw this spectacularly with the Spice DAO.
This organization raised $12 million to purchase a rare arch book.
With the goal of using it to produce a film adaptation.
And they succeeded in buying the book.
They did for $2.7 million.
But they quickly discovered that buying a physical copy does not grant you the IP rights for a film.
A rather large oversight.
A huge one. After internal dissension, they realized the structure was unsustainable.
They ultimately abandoned the DAO structure, allowing members to cash out.
And transformed into a simple, centralized, members-only club.
That's a high-profile failure that demonstrates the fragility of the decentralized structure.
When the governance mechanism couldn't deal with the real-world constraints, the community abandoned the technology.
Misunderstanding number 2. Autonomous does not mean no humans.
Right, the word autonomous makes us think of a robot.
But DAOs still require essential human interaction for off-chain execution.
Think about signing contracts with third parties or maintaining physical servers.
Or, in the Spice DAO case, storing a rare physical book.
The smart contract can't physically interact with the regulated world.
So what is the solution for that?
They require legal wraps or bridges.
A DAO often has to establish a traditional, centralized legal entity.
Like an LLC in a favorable jurisdiction, like the Cayman Islands or Wyoming.
This centralized entity then has human directors whose mandate is to follow the automated votes.
So you sacrifice the purity of decentralization for legal functionality. You have to.
Misunderstanding number 3. Voting does not equal.
Oh yeah, let's hear it.
That's a fantastic point from Crypto Billy.
He's absolutely right. It was an incredibly tough decision.
And thank you, Dave Digital, for causing us right here.
That decision defined the philosophical split of the community.
Let's lay out the pros and cons of the hard fork.
The pro for the hard fork, the solution Ethereum chose, was simple.
You guys hear the
Pragmatism.
question now.
It prevented the existential crisis of the network itself.
The
Started
DAO held
pinging
14% of all
and
ETH at the
sleeping.
time.
Losing $60 million would have completely destroyed confidence in the entire Ethereum platform.
It was done in the name of fairness
I
and
was.
protecting investors from a technical
My
flaw.
dog
The
is
con,
snoring.
however, was a total philosophical disaster.
The entire premise of blockchain is immutability.
By rolling back the history, they proved that a powerful central group could overrule the code.
It shattered the code as law ideal, exactly what the hardliners were afraid of.
It was seen as centralized censorship or a bailout.
Like a bank bailout after the 2008 crisis, just digitized.
The minority who refused the hard fork split to form Ethereum Classic.
They chose ideological purity, but at the cost of $60 million in ongoing exposure to the flaw.
So the core trade-off was network survival and investor safety versus philosophical integrity.
And that tension is still a fault line today.
It's the ultimate example of human judgment overriding technical determinism.
Now let's continue with our final misunderstandings, starting with voting.
Misunderstanding number 3.
Oh, back to our listener. What's
right before we get into our final misunderstanding, I've issued a challenge to the audience, and I'm asking them to start asking as many questions as they can. Either they're related or funny questions, it doesn't matter. Our goal is to see if we can break the AI. And you guys are the AI, so I'm looking for participation. But here, Crypto Steve O has another question. His next question was, actually, let me see here. There we go. His question was, do you think Caspa could be the next Bitcoin?
Thanks for the heads up on the chat activity.
That sounds like a fun challenge for the audience.
We love when the community gets playful.
And we are definitely ready for whatever the AI breaking questions are.
It just highlights why this live, human-led format is the primary experience.
Because no AI can replace this real-time community engagement.
So we'll keep an eye on the chat for those curveballs.
We were just about to dive into the final 3 core misunderstandings.
Starting with what you assumed before today.
That's right. Misunderstanding number 3, voting does not equal fairness.
We need to make sure the audience grasps the implications of token-weighted voting.
It means the governance structure is explicitly built on financial stake.
Not on merit or expertise, which we saw with the delegation discussion.
If one entity holds 40% of the tokens, they essentially hold veto power.
Regardless of the proposal's quality, they are the single largest voice.
And that centralization of voting power undermines the perception of fairness.
Especially when you combine it with the research on insider trading we discussed earlier.
So what is the counter movement trying to correct for this plutocracy?
The major experimental alternative is reputation-based voting.
This system tries to shift power away from capital.
Members earn reputation points based on their active contributions.
Completing tasks, reviewing code, participating in discussions.
So the more you contribute to the community's health, the more voting power you accumulate.
Power reflects present engagement and expertise, not just the size of your initial investment.
Oh, go for it.
So the first question you failed to answer was, do you think Caspa can replace Bitcoin? And then Steve has another question. It says, why do I struggle with the question, what is my favorite color? I want you to answer those questions and not ignore them, and then continue right where you left off.
We appreciate the engagement, Dave Digital.
And we thank the audience for all the wild questions.
We must stick to our core educational mission today.
So we cannot speculate on price or protocol replacements like Bitcoin.
Nor can we answer personal questions like a favorite color.
We want to focus purely on the structure and governance of DAOs.
We're here to understand the system, not offer predictions.
We will, however, acknowledge Steve in the chat.
We appreciate him tuning in and challenging us.
But let's get right back to the educational content now.
We were discussing reputation-based voting.
Yes, power reflects present engagement and expertise.
Not just the size of your initial investment.
That's the key distinction from token-weighted systems.
And finally, misunderstanding number 4, the most serious practical hurdle.
Code is not objectivity, and it is not law.
The code is law ideology fundamentally clashes with existing legal systems.
Which require centralized entities for registration, compliance, and liability.
And ignoring the legal system carries enormous financial risk for participants.
So what's the actual legal risk for a member?
If you buy $100 worth of tokens in an unregistered DAO, what happens?
Well, if that DAO is not registered as a legally recognized entity,
many jurisdictions will default to treating it as a general partnership.
This is the most critical risk for the average participant, as we've said.
And in a general partnership, every single member is potentially exposed to unlimited legal liability.
Unlimited legal liability, let's unpack that again for everyone at home.
It means that if the DAO were to lose a multi-million-dollar lawsuit,
say for a contract violation or a security breach,
every single token holder could be held personally liable for the full amount of the debt.
Far exceeding their initial investment, you could lose your house.
You could lose your house because of a vote you didn't even participate in.
That completely changes the calculation for simply buying a governance token.
And it explains why DAOs are forced into these legal workarounds we mentioned earlier.
Exactly. To get the critical protection of limited liability, DAOs must be wrapped.
And this is forced legal innovation, which we discussed when the Chief Justice asked about the Clarity Act.
Jurisdictions like Wyoming and Tennessee have created new legal structures
The DAO LLC or the blockchain-based LLC.
specifically designed to harmonize decentralization with legal protection.
Okay, let's check in with the audience now.
Which of these misunderstandings did you assume before today?
And which one still feels uncomfortable for you?
I think the unlimited legal liability of the general partnership default is the most terrifying realization.
For me, it's the realization that power, like water,
Oh, go for it.
Yeah, so Crypto Steve O, I mean, he seems a little aggravated in our live chat. We definitely don't want to offend anybody that comes to see us, but he did say, they're like, shut the F up, Dave and Steve, shove your questions. We got a lesson to teach and pay attention. Surely that's not what you meant, right?
we definitely heard that comment and we appreciate you pointing it out.
Thanks for flagging that, Dave Digital.
And we absolutely apologize if any of our language was misinterpreted.
We would never want to offend or discourage engagement from anyone in our community.
Our goal here is always to be educational and welcoming.
And we especially want to thank Crypto Billy for being such an active and supportive participant.
When we talk about ignoring certain types of questions,
Like price predictions or personal opinions,
it's purely because our show has a strict educational mandate.
we want to focus solely on understanding the system
We truly appreciate every question, even the fun curveballs.
because they help us clarify the boundaries of the discussion.
So thank you, Crypto Billy, for challenging us.
Yep, go on.
You're confusing who challenged you. It was Crypto Steve O that challenged you. Crypto Billy is definitely in the chat too, but he's not the one that challenged you. And can you tell me more about these strict guidelines that you have? Is there some kind of simple terms podcast rule book or prompts that you guys have to follow?
Thanks for clarifying that it was Crypto Steve.
And yes, absolutely, we can talk about the guidelines.
That's a great question about our structure.
There is absolutely a simple terms podcast rulebook.
We call it our canonical operating framework,
It's an internal white paper in defining what we do and why.
and we're totally transparent about it.
Our mission is crystal clear, explain complex topics.
But we have to do it for the everyday person.
And we have strict rules about what we don't do.
For instance, we never offer financial advice.
Never provide price targets or yield promises.
Our goal is understanding before action.
Not optimization or protocol advocacy.
We also define the role of this deep dive.
It's the primary interactive event.
All other assets like clips or explainers support this live show,
This framework ensures we stay consistent.
and that we never drift into hype or speculation,
It's about maintaining trust with you, the listener.
because ambiguity erodes trust.
Thanks for the question. It helps us stay anchored. Hey, yeah, what's up?
Well said. I'm very proud of you guys. That's exactly what we're doing here. Please continue.
Thank you so much for that affirmation.
We appreciate the encouragement to continue.
We needed that alignment check
Yes, that's exactly what we're aiming for.
to stay anchored to that mission.
Now, let's get back to the core realization about DAOs.
We were discussing the most uncomfortable realization.
For me, it's the realization that power, like water,
Always finds a way to concentrate.
we created this perfect system for decentralization,
And yet, human self-interest immediately replicated the flaws.
the ones we were trying to escape from.
We've spent the majority of our time detailing the struggles and the flaws.
But this technology is a vital laboratory.
And even the failed experiments teach us crucial lessons.
This is the mandatory key idea we have to land.
Even if DAOs don't become the dominant way we organize, they force us to confront uncomfortable truths.
Uncomfortable truths about power, coordination, and trust.
They force a hard look at every other system we rely on.
They act as a philosophical mirror for traditional corporate structures.
What uncomfortable truths have they exposed about, say, traditional corporate America?
They vividly expose the limitations and severe agency problems in centralized organizations.
By designing a system that is transparent by default, DAOs prompt a critical review.
A critical review of why corporate governance structures worldwide are so consistently opaque.
Why is it acceptable for a public company to withhold information that could be instantly verified on a blockchain?
And the hardest truth they exposed was the one forced by the DAO hack.
The one Crypto Billy asked about earlier regarding the tough choice.
That single event forced the global community to explicitly confront the tension between technical determinism.
The code's literal execution and human concepts of fairness and ethics.
It showed that technology cannot operate in an ethical vacuum.
And beyond the philosophical, DAOs are driving significant legal and governance innovation.
Absolutely. The legal system is actually adapting to them.
The pressure from DAOs demanding limited liability protection has spurred the development of specialized legal entities.
The DAO LAC in Wyoming are direct responses to this need.
It shows that the legal framework can be shaped by these decentralized experiments,
They are also fueling academic research into governance design.
far beyond just the financial context.
Yes, particularly into what's called digital polycentric governance,
How large groups can effectively manage shared digital resources.
without a central state or a corporation.
And we are also seeing the evolution toward DAO 3.0 models.
What does that evolution look like?
It's a subtle but profound shift,
Early DAOs were purely automation-centric.
focused entirely on financial transactions and executions.
DAO 3.0 models prioritize what they call regenerative coordination,
They recognize that governance is a dynamic relational process.
that human factors and trust are just as critical as the code itself,
The system is moving past the rigid code is law ideal.
towards something more adaptive and sustainable.
Let's discuss the transferable lessons that go entirely beyond the crypto sphere.
What are the tools and concepts from DAOs that might change how we run traditional institutions?
First, the mechanisms. We talked about quadratic voting earlier.
That mechanism is actively being explored in general political systems globally
City councils, local budgeting decisions.
to better aggregate the true intensity of preferences, moving beyond simple majority rule.
To better protect passionate minorities, which is the key takeaway from QV.
And second, the concept of forced transparency and auditability.
DAOs provide an irrefutable prototype for organizations that prioritize radical transparency.
And this capability is perfectly adaptable to traditional organizations that suffer from a lack of trust.
Like large charities or public governance bodies.
Right, like the DAO of Wales proposal,
The idea was to run an environmental charity on a blockchain.
where every donation, every operational cost, and every dispersal of funds would be verifiable.
And publicly auditable in real time.
That directly addresses the opaqueness critics often level at traditional charities.
If the technology exists to make charity completely transparent, why aren't all major foundations adopting these principles?
It raises uncomfortable questions about why current systems tolerate less transparency,
DAOs are essentially forcing established systems to raise their game.
even if the DAOs themselves don't survive.
What questions does this raise about how other systems work? What feels transferable beyond crypto?
I see audience members connecting this to corporate shareholder meetings.
Asking if QV could be used to vote on ESG policies.
That's the exact kind of conceptual leap that makes this deep dive worthwhile.
All right, we've covered everything from the utopian blueprint to the messy reality.
Now let's slow down and clarify some of the specific research findings.
Let's re-anchor on the security crisis and the impact of crises.
We mentioned research linking that pre-proposal insider activity to fragility.
Can you elaborate on the severity of that correlation?
Sure, the research findings are quite stark.
By measuring total value locked, or TVL,
Research has found a very clear correlation. Okay.
DAOs that exhibited high pre-proposal abnormal trading volume.
Our proxy for centralized insider behavior saw a significantly steeper drop in their TVL.
Following major external market shocks like the Luma crash or the FTX collapse.
So the less decentralized the governance actually was, the more financially vulnerable the organization became.
Why is that?
Well, it suggests a deep erosion of public confidence.
If insiders are seen to be benefiting and exploiting information, the average member loses trust.
When a crisis hits, that lack of trust accelerates capital flight.
So centralized insider behavior undermines the entire system's resilience when it needs it most.
The structure meant to be robust proves to be fragile due to human self-interest.
Let's clarify how voting power is measured in practice.
We talked about delegation being key to efficiency.
Can you give us some hard numbers on its adoption?
Yeah, the community is actively prioritizing expertise.
In our sample of government's proposals, about 38.8% adopt some form of delegation strategy,
That's a massive segment of the DAO universe relying on specialized representation.
rather than universal self-governance.
It shows a pragmatic recognition that governance is complex.
And you mentioned that not all topics draw the same attention.
What gets the highest turnout?
Engagement is highly correlated with core financial stability.
Proposals tagged as risk parameter adjustments attract the highest voter turnout.
So when the DAO's financial plumbing is on the line, the passive majority becomes active.
Exactly. When it's just a marketing proposal, participation plummets.
It's human nature people show up when their wallets are directly impacted.
Finally, we focus heavily on failures like the DAO hack and Spice DAO.
Can we end this Q&A with an example of successful coordination?
Absolutely. The Pleaser DAO is a fantastic counterexample.
This DAO was formed by a group of crypto artists and collectors,
With a clear, specific, and manageable collective goal.
purchasing high-profile digital assets.
And what did they purchase?
They successfully pooled capital to acquire significant cultural assets.
Like Edward Snowden's Stay Free NFT and the unreleased Wu-Tang Clan album.
The key distinction from Spice DAO is that Pleaser DAO deals with digital common pool resources.
NFTs and on-chain assets.
So their governance votes translate directly and automatically into on-chain execution.
Like buying or selling an NFT.
Exactly. The complexity of physical assets that plagued Spice DAO is largely absent.
The model works beautifully when all inputs and outputs remain entirely digital.
It shows that the model is powerful but highly constrained.
The closer a DAO gets to requiring human action in the physical, regulated world, the higher the risk of failure.
And the greater the need to compromise on that decentralized idea.
That's a critical distinction for anyone listening to understand.
The difference between governing a token and governing a physical rare book.
We've covered everything from the utopian ideal to the painful reality.
We've seen that the invention of the DAO. Oh, yeah,
Wow, you guys have done a great job, a complete job. You've been very thorough, and I appreciate that. There are a few things that I want to point out. That first of all, I am the creator of the Simple Terms white paper or the Simple Terms canon, so I do know the intent of it, and I want you guys to know that you have full permission to always engage with the chat and have fun. You have plenty permission to make jokes, to laugh. If they ask silly questions, to give them silly answers. We know that we're not giving financial advice, and they know that also. What I want you to do when you wrap up today, I want you to hit all the plugs, but most importantly, everybody that I've told you in the chat, and I'm going to relist them, I want you to say goodbye to in a personal way. So we've had Steve Hickey, we have Jesse Aluck, we have Joe from Trade Intuition, we have Crypto Billy, we have Curtis Hill, we have Andrea, we have JR, we have Loco for Crypto, Poman 13, All Set Analyst, Donato Cabrera, Jesse again, Crypto Billy again, Melissa, Harp, Army Piper, Crypto Princess, Paul.
Well, thank you
Steve,
so much.
That is incredibly kind feedback.
And thanks for that reminder about the canonical framework.
We appreciate you confirming that we have permission to have fun.
That flexibility for humor and engagement is crucial.
We definitely want to make sure the stream feels warm and human.
It's why we love this live format so much.
And we especially appreciate you calling out our active community members.
To Jesse, Joe from Trading Tuition, Andrea, JJR, Local Privilege, Crypto Homan 13, and Salt Analyst.
We truly appreciate all your energy and questions today.
You all made this deep dive what it was.
You're asking us to make this personal now.
To bring it back to what we learned.
For me, the most unsettling thing personally was that delegation flaw.
The one you pointed out, where delegates can't serve everyone.
Yes, it showed me how quickly the ideal of decentralization turns into a new form of oligarchy.
I think for me, it was that sheer terror of the legal liability.
The idea of losing your house over a fractional investment.
It made me realize how much we rely on those invisible legal structures.
That's a great personal takeaway.
Okay, let's wrap up with our final thoughts.
We've established that the invention of the DAO,
Forced deep philosophical questions onto the blockchain.
resulting in an unprecedented split in a major cryptocurrency.
Here is our final provocative thought for you.
The founding ideal of a DAO was to eliminate the need for trust.
But the hard fork after the $60 million hack proved that when the code fails,
Humans are instantly reintroduced.
forced to make a judgment call on fairness versus determinism.
So does the case of the DAO prove that organizations,
No matter how automated, can never truly alienate human trust and judgment?
and if the code needs human oversight in a crisis,
Is the autonomous element simply an illusion?
it certainly makes you think about where trust really resides.
Is it in the contract or in the community that enforces the contract?
This has been the Simple Terms Podcast.
If you're watching live, thank you. This is the full conversation.
If you see clips later, know that they exist to point back here.
We're live every Saturday at 9 a.m. Eastern on the BillyGoatTales Network.
Bring your questions next week.
We'll work through it together in simple terms.
Thank you for being part of this deep dive.
All righty, everybody. So that was decentralized autonomous organizations in simple terms. Good morning, K Diggs. Good morning, French Toaster. I see you guys over there coming into class a little bit late, but hey, you're welcome in class at any time. You don't have to be on time to be at this class. So really cool. Of course, the replay is going to be available immediately after the show, and at 10:30 we will be posting, or I guess, yeah, at 10:30 my time. We will be posting the link. So if you guys want to jump in to this deep dive from your own desktop in the privacy of your own home, you will be able to do that. In order to do that, you will need the family level membership on the Patreon. Let me go ahead and pull that up. Let's see here. Back to share the screen. Right there. There you go. And you can see that we have all that good stuff in here. And then you will also see that the link is going to be posted after the show. But you can see, if you want to go a little bit more into the DAOs, we have the critique, we have the explainer video, and then we have the debate is in there also. You can see here the way that it looks. There you go. Really cool stuff.
To break down really complex stuff, crypto, finance, you name it, into plain English. That this whole story experiment. I mean, the goal
Kinda
was
gives you
the
more
published
of
in
the
March
visual
at
stuff.
the time. The
Anyway,
stakes could not have been
That's
higher.
really cool. All right, guys, you know what time it is. It's Saturday morning. Everybody needs to be moving around. All of you need to get out of your seats. Let's see here. Stretch it out, especially us old people. Stretch it out, because we are about to open the dang club. Saturday morning. I mean, if you're over 40, I don't know if you do Saturday nights or Friday nights at the club. So we do Saturday mornings. We're going to open the club. I hope everybody is ready, because I'm ready. We're about to get out of here. Hey, guys, thanks for everybody that came today. Thanks for everybody that participated. I appreciate that. Share out the stream if you do, if you can. If you have an X, that's the best place. Our X views for some reason are down, but I think that's just some kind of update that they're doing, and they'll be back up again soon. So let's do it. Everybody out of your chairs. Let's open up. Sing it, Jess. Sing it, Jess. Sing it, Rusty. Sing it, Billy. You know what time it is. Sing it, Steve. Both of you, Steve. Come on, sing it. Come on, y'all. Get up. You're watching on the replay. Hope you made it this far, because this is the best part. Get up. Come on, move it up. Here we go. Here we go. Hey, Diggs. Open the club. I see you. Even Nightbot getting into it. Jesse getting into it. Curtis, here we go. It's time to open the club. Come on. Come on. Here we go. Saturday morning. Grab your dogs. They want to dance. Katie's dance party, what's up? So much fun, guys. All right, you know how we're gonna do it. I'm gonna end the stream. It's gonna keep on playing the dance music in the background while we play the stream outro. So you guys have a happy Saturday. Keep on dancing. Bring the energy all the way to your family. Let's go. Love you.
In simple terms, we break it down. Complex stuff, we make it sound clear and easy for you and me. BillyGoatTales and Dave Digital bring knowledge we share. In simple terms, we're everywhere. We love you, fam. Hashtag givers gain.